What's up, guys? I wanted to make this video go over some pitfalls, I guess you could call it, for VSA traders. Common mistakes that traders make, and you may have gone through my videos and learned a lot of the stuff that I do. But these are some important points I want to point out here. So, starting with, let me just bring it up here. You're just looking at today's chart, so have something on the screen. All right, so the first one is always looking to trade against the trend. This is a common mistake for VSA traders. Price is moving down. They figure, well, the noobs are selling. This is my opportunity to look to buy. And of course, there are reasons for that. If you get, stopping volume, climactic volume, you want to look to buy if that happens on a down move. But generally, with that approach, you'll miss opportunities to get in with the trend if that's the only thing you're looking for. So if you don't see climactic volume, you're going to want to look to go with the trend, and mainly that's on a pullback. So if price is moving down, again, I'm not going to chase it down. I'm not going to go short on a break to the downside and chase it, but I am going to look for fib retracements, up thrust, signs of weakness on increased volume or even no demand. I talk about that in other videos. So looking for signals that can get you in with the trend unless you've actually seen stopping volume, climactic volume, so you don't miss those opportunities. So that's the first one. So trend is your friend, as they say, until climactic volume. Or basically there's two things. Either you see the high volume, you don't want to sell anymore once you see demand coming in. Again, example of a downtrend. But the other case would be, let's say, generally we're talking about a 1 hour chart is what I use for my overview. And if you're seeing, let's say, a failure of the structure. So let's say your price is moving down. You don't see climactic volume at the low price. But now from a 1 hour point of view, again, that's my home base, we start to see higher highs and higher lows. That still doesn't mean it's time to buy. I still need volume to confirm that. But just the fact that we're now moving into higher highs and higher lows rather than a nice healthy downtrend, looking for a long signal, looking for demand to come in and strength to come in that situation is reasonable. So if price is moving down, lower lows, lower highs, stopping volume, climactic volume is required to go long. Price is making lower lows, lower highs, but then makes a new high, makes a higher swing low, and just that structure starting to change. Signs of strength can be used to get in long. So that's my approach. Okay, moving on. Number 2, tunnel vision, trading the smaller time frames without looking at the higher time frames. 1 hour, mainly, again, is my home base for the overview. But again, looking at 4 hour, daily, weekly, always checking that stuff at the beginning of every day, because you may go to the weekly and see, oh, back 4 months ago, we were at this price before, and this is a support level. Or on the 1 hour chart, of course, as the main thing, using that, to guide you with technical analysis, support resistance, fibs, trend lines, basic stuff going on. So, and again, as far as volume is concerned, in that situation, we're talking about background. So a lot of traders ignoring the background. What is background in VSA? That's the recent activity on high volume that communicates to us if smart money is buying or selling. So we don't want to go against that. So if our background is showing strength from a 1 hour point of view, we don't want to be going short from a 5-minute signal and ignoring that, or not even looking and just staring at a 5-minute or 15-minute chart. Okay. Third, bad volume feed. You can't just use any broker in spot effects for your volume. Now, volume feed is based on price tick activity. So basically, from one broker to the next, you're going to see slightly different ticks in price, which is going to create different volume bars, different sizes. And it's a matter of, for me, I just checked out a bunch of brokers. I haven't checked out maybe some of the newer ones. This was a few years ago. But I liked IBFX and Go Markets. IBFX and Go Market. So you could Google them and get a demo of the MT4. Now, it doesn't matter what platform you're trading with, what broker you're using. I'm talking about getting a demo from IBFX or Go Markets to do your analysis. You could, of course, take your trades on your platform with your broker. That is about the only point on that one. So, it's based on tick activity, and we're talking about prices that generally reflect the market as a whole better. Some of the smaller brokers, the newer brokers, whatever, the ones that are messing with price feed and not giving you, I've seen some bad stuff. So IBFX, Go Markets, those are pretty reliable. Before that, I was using ODL, but they went out of business. They got bought up by FXCM, and while mentioning that, once ODL got bought up by FXCM, their volume bars actually started repainting. So that's what it had me go search for another one, because of course you can't have that. That was really odd. Never saw that before that, besides that one case. Okay, number 4, wrong time of day. After 16 GMT, give or take, activity starts to die out in the market overall. The majority of the world is the markets are closed. It's the later half of New York session, and activity starts to die out. So your volume is going to start to generally decrease after 16 GMT. So the problem is this can give false low volume signals, right? So let's say you're looking for a low volume test. It's 17, 18 GMT. You think you're seeing a low volume test, you get in the trade, and now you're just sitting there. The low volume was actually the market activity dying out for the day. You can get stuck in the trade. You can basically get a false signal. So a general rule is after 16 GMT is to not take a trade at all. That's the end of the day, unless volume is continuing to stay high or active. If it's still active, then there's a reason for that. There's a consensus among traders to continue to trade. Maybe there's late day news, whatever it is. But that's really the exception, that it would stay active. I would expect, on a regular day, most of the time, you start to see that volume start to die off. So expect that. Also, as far as time of day, Asia Open, the first hour or two of Asia Open can give an opportunity, but after that, you tend to sit there a little bit. So scalping during Asia Open is something I do sometimes. Now, if that Asia Open situation, opportunity, is in line with the previous day's action, then I'll be looking to take that trade. So, for example, stopping volume occurred during the day, during the trading day, accumulation, and then price moved up a bit. Now we're moving into Asia session for the next day, and we have a retracement to a 50 fib and stopping volume. So that's a long opportunity based on the storyline going on in the charts, based on what you saw, accumulation, you saw strength, we saw an up move successfully happen coming out of accumulation, and now for Asia we have a little retracement. That tends to happen, retracements for Asia session. You get a retracement to get in that whole situation that connects with the previous day. So I would never trade Asia Open going against what happened the previous day. It's more of, if it's a continuation of the situation, then I'll look to get in. And again, it's really those first couple of hours where things pick up and give you that opportunity. It may end up being a scalp because it could sit there and go nowhere after a while, or you may find yourself in a good position for what you expect to play out that day, and you may want to hold. But that's the general idea there. Okay, made the point. So careful with that Asia stuff, a certain way to go about it. And after 16 GMT, activity starts to die out. So look out for the lower volume. It can give you false low volume signals. And the last one, number 5, watching too many pairs. You're trying to follow the storyline here. And if you're watching too many pairs, it's like watching a bunch of movies at once. You're going to get them confused. You're going to lose the detail and the amount of focus that you can put into what's going on with that particular pair or instrument. You're going to lose focus if you have 5, 6, 7, 8, 9, 10. I like to, basically I'm looking at about 5 pairs, euro dollar, pound dollar, Australian, US dollar, and a couple of yen pairs. So 5 or 6. And that's it. And I'll look at those pairs at the beginning of the day and say, okay, which ones are closest to an opportunity? Maybe these 2 or 3. So now I'll hone in on those. So looking at 12 pairs for VSA setups is really going to cause you to miss opportunities, I think, in the end. Let's see any other notes on that. Yeah, that's about it. So those are the 5 points I wanted to make. Hopefully that's going to help you already in your trading because, you know, with the videos I've made up to this point, this is the stuff that kind of pops up with people that I repeatedly have to tell people. So here's our official video explaining these things, and that should take care of that. All right, guys, hope that's helpful. Have a good one.